Hello everyone. Today we will learn about stock market. Understanding the basics of stock markets is essential whether you choose to invest in it or not. Why? Because these are fundamental financial topics interlinked to several other aspects in life. This is a little complex topic, but don't worry, we made this easier for you. Let's start with an understanding that a stock, share or equity means the same. These terms are used interchangeably and have subtle differences, but for the purpose of this video, we will keep the meaning the same. Now, what is a share? It means an ownership or equity in a company. Just like how you ask your friends about your share of a pizza when ordering in a restaurant. And the stock is basically a collection of shares which represents ownership in multiple companies. Let's look at an example. Suppose you are an investor who has purchased 100 different shares of Apple and 100 different shares of Tata. It means you have ownership in the profits of Apple and Tata stocks altogether. A small note here, some countries use stocks and shares in place of each other, so don't get confused if you search for the per share price of a company and the Google search result shows you the stock price history. Now that we understood about a share and a stock, let's see what a stock market is. A stock market is a place where people buy and sell stocks through the help of stockbrokers. How does it work? The stock market of India operates through two exchanges, National Stock Exchange and Bombay Stock Exchange. The companies list their shares at a specific price on the trading terminal, which is also an electronic platform of the stock exchange so that the public can buy and sell them. And who regulates stock exchanges? To ensure fair pricing and transparency in transactions, Securities and Exchanges Board of India, SEBI, manages the stock exchanges in India. Now that you know about the stock market, you may ask, why are the stock markets required? The stock markets serve two main purposes. Number one, to provide money to companies which they can use to expand their businesses further, such as hiring employees, opening a new office, etc. Number two, to let investors earn profits by selling shares at higher prices. Who determines the price of a stock? Demand and supply are two main factors. If the demand for a company's product is higher, then its stock price will rise. For example, if Samsung is selling good number of electronics and mobiles in the market, its share price would increase. However, if Samsung mobile phones get banned in the market, the prices of its shares would decrease. You will also hear two terms in stocks. One is bull and the other is bear. Bull and bear markets. What does bull and bear market trends in the stock market mean? If the trend is bullish, it means stock prices are increasing, people are earning profits and unemployment is less. Hence, it indicates the nation's economy is stable. If the trend is bearish, it means stock prices are falling and investors are at loss. Hence, if the company in which you invested isn't doing well, then you will also have to bear the loss in terms of the share price once you become a shareholder after purchasing its shares. Hope you understood the basics of the stock market pretty well. You can subscribe to us to learn more such finance topics at Skillioma. www.skillioma.com. Skillioma, beyond curriculum.